This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now take a look at the gold market. Well, yesterday we have said that market has accomplished the first stage of our trading plan. In particular speaking, it has hit the target of the ABCD pattern that also creates an agreement with the FIB resistance around 130, 30, 35, 30, 37 area. So you can see that market still coiling around it. So don't be deceived the fact that market now is trying to show some upward continuation or something of that sort. Well, that's very often happens when the market is coiling around, since we should treat this area mostly as a range, not as the precise number. So if that market stands slightly high, it absolutely doesn't mean yet that this level has been broken and market without no respect will pass through it. If this will happen, well, that will tell us something. That's how strong market is. If it could pass through the ABCD target and pass through the agreement resistance without any respect. So that's also contains significant information. But that is a bit too early to speak about it. Right now, I would still treat this situation as the standing at the resistance rather than treating it as the breaking of the resistance. So market hasn't passed, it's too far from this area yet, and speaking this probably market has broken this area without any respect and continue move higher. Especially if you will take on the consideration the patterns and the situation that now stands on the intraday charts, you will understand what I'm talking about. So on the 4-hour time frame chart, we see a solid bearish divergence. Here market has formed shy bullish stop grabber, but this pattern already has hit the target. So yesterday we said as market has accomplished the first stage, the second stage, for those of you who would like to take the short position, scalp short with the target around 1275, 1280 area, should be the searching for the pattern that could trigger the downward retracement. Yesterday we haven't got this pattern since market just has hit the target. But today situation is gradually becoming clearer. So one pattern that we could get here could be a head and shoulders pattern. Because you can see market has passed through the 127, the next target is 1618, so that could be the 1618 head and shoulders pattern. It's very probable. It could happen here. Although we haven't got the butterfly, particularly speaking, you could treat as the butterfly this dynamic. So maybe you could treat it as the butterfly, but the right wing will be mostly like just straight action rather than some real wing. So it doesn't look like the wing. That's why I use the extension that is typical for the head and shoulders, but I do not treat this as the butterfly. Anyway, market now stands at the area that is very typical for relation between the head and the shoulder, and this really could be the pattern. Also we have the bearish divergence, okay, very significant with the MACD indicator right at the daily agreement. So that's really significant. On the hourly time frame chart, we finally have got something, and that something is bearish wedge pattern. That's in fact stands at the top of the head of the potential head and shoulders pattern, if we will take a look at this scenario from that standpoint. So we can see that market is forming the bearish wedge. Well, I'm not sure that we could treat it as the 3 drive, but who knows, maybe we could, because take a look that this second drive stands at 1618 of the first drive, and from that standpoint the third drive also should stand at the 1618 of the second one, but it stands in fact in the same area of the crossing of the 1618 of the first and 127 of the second. Okay, so for the perfect looking 3 drive, the second drive should be slightly lower, so should start slightly early earlier, but here, well, anyway, despite whether we will treat it as the 3 drive or not, the wedge still in place, and the bearish divergence with the MACD on the hourly time frame chart as well also in place. So that could be the pattern that we could trying to use for taking the short position. But since, as you can see on the 4-hour time frame chart, the 1618 extension of that shoulder stands slightly higher, and probably, guys, there are two possible ways how better to take the short position. If you would like to take the short position right now, right here, you should place stop somewhere higher, above the 1618 extension of this retracement, because market still could show some small action to the upside and hit this target. Okay, the same is for hourly time frame chart. You could see that the 1618 of the second drive stands slightly higher. That's why it's better to place the stop above these extensions. Or the conservative tactics, as usual, we have discussed this million of times, suggest that you could try to take the short position when this move to the downside already will start. Because right now you can see that trend still bullish. On the 4-hour time frame chart, trend still bullish. On the hourly time frame chart, trend bearish, but it's just turning the direction. Also, guys, looks like here we probably could get the stop grabbers. Let's take a look. Well, where's we get the close? Close was 42.94. No, that's not the stop grabber, because this was still the bullish trend with this candle, and here is the first candle that shifts trend to the bearish side. Anyway, if market will show some acceleration down and trend shift bearish, you could try to take the position on the retracement. That is the conservative tactics. So decide what's more suitable for you. So you could, if you take a position here, in this case you will get the better entry point, but take the more risk that market still could show some upward action against you. But when you take the position on the retracement after the move down, in this case market already will turn down and you will get less risk, but your entry point will be a bit worse than right here. So anyway, here is really interesting situation on the gold market, and the downward potential is not small. It's 1280 area. It's $60 from this area, so it's really big move for the gold market. And let's keep an eye on it, because this is potentially very interesting setup that's worth our attention.